When it comes to the world of tax deeds, tax defaulted property investors experience 5 major problems that not only cause them headaches when they're looking for the right property to invest, but also cause them not to make the profits they should receive once they've won the property at auction. In this video, I'm going to reveal what they are, how to overcome them, and give you the solutions to finding those ideal properties and making the profit you deserve and others aren't telling you about. Imagine tax defaulted property investing is like a 10,000-piece jigsaw puzzle. To succeed, all you need to do is connect the pieces together step by step. When you start, you don't magically grab 2 pieces and then automatically join together and find another piece that connects until you've connected all 10,000 pieces in minutes. No, instead, you probably pick 2 that don't go together at all. Do you stop right there and throw all the pieces in the air, frustrated that it doesn't just all go together? Or do you ask, since the puzzle piece doesn't go with this piece, which one does? And try again with a different part of the puzzle based on what you've learned. Successful defaulted property investors do the latter. Each step in the investment process is just a piece of the puzzle. Don't expect them all to fit. Instead, they look at different pieces of the investing puzzle and see what works, what doesn't, and adjust. So let's look at the 5 major pieces in this puzzle that newcomers face when starting the process of tax deed investing. One of the first things that may cause confusion or be overwhelming for beginners is when they realize each state can be different. Some sell tax deeds, others sell tax lien certificates. And yes, there's a difference between the two. And then each county is separate and an independent taxing authority, all with their own rules. With over 3,000 plus counties in our 50 states, that's a lot of rules. And because this can be confusing with so much information, not only to locate properties in the right specific areas you're looking, but to find the right property, to make this challenge easy, I've created the Magic Map. The Magic Map gives you access to over 100 million properties available nationwide at your fingertips, all from the comfort of your home. It will also provide you with the tax defaulted auction list. Whether you're looking to invest in a property in the rural Midwest or in the bustling city of California, New York, or Florida, or anywhere in between, the Magic Map gives you access to all of them with regular updates. It's the most up-to-date resource you will find for your tax defaulted research investing needs. The next problem investors face is the government doesn't send you ideal properties on a silver platter. Things are not always easy to figure out. It might be confusing when you go to that website. We teach you how to make this simple. Understanding how to interpret and research the public records is the key, and it's why it's one of the first trainings we provide you in our program. Navigating the state statutes and the state website will reveal the vital information you need to be successful with your tax defaulted property investments. It can be a minefield when you first look at the information the government provides you, and not understanding or missing just one thing can cost you thousands of dollars. And this is why we translate the government jargon for you so it's plain English and you know exactly what it means. The next problem that uninformed amateur newcomer investors mention is that there is too much competition at tax defaulted auctions. This is a false statement. While there are many people bidding on popular properties, this may be people who have not completed proper research. In other words, they are not doing in-depth homework. I call these people risk takers. Everyone who has been through our training knows that tax defaulted properties are in abundance. Numerous properties never receive a bid, even though they are listed for auction. In many instances, there are leftovers after the auction is completed. These are properties which go unsold at the tax defaulted property auction. The majority of the competition is often coming from bidders attempting to purchase properties with low starting bids. Our training gives you a certain buying criteria that not only identifies those properties that many overlook, but also gives you strong possibility of making $25,000 to $50,000 profit. A bargain purchase is our target for you. While we can't guarantee it, using our proven, tried and tested buying criteria puts the odds definitely in your favor. There are as many as 5,000 plus tax defaulted public auctions annually. Many of those auctions have only a few attendees because the county announces auctions on the county websites and in the local newspapers. Tax auctions are not advertised on commercial websites like Zillow, Realtor.com, Facebook Marketplace, or the multiple listing system. Successful bidders attend multiple auctions. Just like our jigsaw puzzle, it's unlikely you'll be successful the first time. That perfect property could be waiting for you at the very next auction. For example, recently one of my students purchased a single-family home in a rural county near Tampa, Florida. The purchase price was only $9,100. The property was used and abused and covered with trees. The county assessed value was $94,000. After cleanup and some minor repairs, the student placed the property for sale as a fixer-upper handyman special using Craigslist, Facebook Marketplace, eBay, Redfin, and a number of electronic websites. The student advertised the property to fixer-upper guys and gals and wholesalers. Over 100 eager investors showed up. Comparable values in the area were $180,000 and up to $200,000. Using a buy low, sell low strategy, the low starting price at the auction allowed a low starting price for the property to be sold. The student turned down a $135,000 cash offer, ultimately selling the property for $150,000 on a rent-to-own contract. And the new buyer agreed to rehabilitate the real estate with hardwood floors, renovated bathrooms, and repair the roof. Here is what's missing. Only a few people understand that this was not the student's first auction. This successful buyer attended auctions in more than 5 states and was unsuccessful because he didn't find a property with his specific buying criteria. Like our 10,000-piece puzzle, defaulted property investing requires patience, research, and an attitude of perseverance. When you have a specific buying criteria we'll give you in our training, you will dramatically increase your success and profit. An important element of purchasing tax-defaulted real estate is pesky liens. The question always is, how do beginners and newcomers know what liens are on the property? Research is the key. The public records will reveal the information. It's free if you know what to look for. Unlike our competitors, we guide you and provide you with a facilitator guide. This is a real person, live, that gives you weekly research training specifically to show you how to research liens at the public records. These are one-on-one classes. You get to ask your questions about the counties and the states that you want to research. Savvy investors understand numerous ways to research municipal liens, easements, mortgages, deed of trust, private liens, and much more. The next big challenge for buyers is to answer, is the title clear? A title search is a process. It requires a professional to declare a property title clear and issue an insurance policy. Many auctions will have 100 or more actual properties for auction. Auction buyers need to research multiple properties. The cost of title research then becomes prohibitive. To solve this problem, savvy investors understand how to research the important public records. We have live weekly classes with an expert facilitator on Zoom to help you. The training shows you exactly where to find the liens and encumbrances filed against the property so you can make an educated decision. In my 30 years of guiding prospective defaulted property investors, our objective is to earn a full-time income with part-time work. Decades of experience reveals newcomers want to discover as much as possible before the auction. This is why I provide many live classes for you. I know what issues you're going to face when you're looking for those ideal properties that will allow you to forecast potential profits of $25,000 to $50,000 or more per property. I've simplified the process and have coaches available for you every week so you can get answers you need to be successful. The process of locating and reviewing the property and the decision-making can be daunting and intimidating. You make many decisions and you want answers. I have already worked out successful answers for you. The truth is, my experienced team can help you eliminate anxiety and mistakes, especially when it comes to legal stuff. You may be worried and concerned. Will you have the responsibility to evict people? This is a legal process. The situation isn't as scary or as difficult as people make it sound. Just so you know, in some instances, property owners could still be living in the property or tenants in the property when you purchase at tax defaulted auctions. My coaches have been through the process multiple times and understand you may have anxiety. Here is the solution and relief. 95% of the process of eviction is handled by an attorney at law who is paid to do so. This is outlined thoroughly in our course materials. And speaking of attorneys, the next big challenge is people think they need to hire an attorney to perform a quiet title before they can sell the property. In certain instances, this is true. Like everything, you don't know what you don't know. But there are a few ways to accomplish the sale of the property without the expense of quiet title. For example, an installment contract. Here the seller is selling a property purchased at auction and using a contract of sale, which the new buyer makes installment payments until the contract is completed. This is where you become the bank and use an installment sale. You're financing the property for the buyer. You, as the seller, retain the deed to the property until you receive the final payment, which may be years from the date you sell the property. And after the final payment, you deliver the deed, and because it's years later, the new buyer will not need a quiet title. This is generally referred to as contract for deed. If you would like to find out what the best deals in each state are, as well as each county, click the link in the description below where you can get a directory to find the defaulted tax property lists. If you'd like to know what I would do if I was to start from zero, from scratch, click the video on your screen now or the link in the description below.